take a look at volume. Volume is not a precise tool, but keep in mind that entry and exit signals can sometimes be identified by looking at both the price action as well as the volume. Volume is often viewed as an indicator of liquidity, as stocks or markets with the most volume are the most liquid and considered the best really for short-term trading. Now, volume shows the number of shares traded in a stock or contracts traded in options or futures. What do you see in the volume chart? What happened to volume when the price changed? What happened to the price when volume spiked? Now, the color of the bar indicates if there was a positive volume or negative volume for the time period. Now, a green volume bar indicates that the close price was higher than the open price for that time period. So the demand exceeded supply, therefore pushing the prices up. It's a bullish signal. A red volume bar indicates the close price for the time period was lower than the open price. Essentially, supply exceeded demand, pushing the price down. This is more like a bearish signal. Now, looking at volume patterns over time can help get a sense of the strength or conviction behind advances and declines in specific stocks and entire markets. Now, volume is a handy tool to study trends. There are many ways to use it, but basic guidelines can be used to assess market strength or weakness, as well as to check if volume is confirming a price move or signaling that a reversal might be at hand. Now, a rising market should see rising volume. Increasing price on high volume is an uptrend confirmation. Increasing price and decreasing volume, increasing price and decreasing volume might suggest a lack of interest, and this is a warning of a potential reversal. Now, a price drop on little volume is not a strong signal. A price drop on large volume is a stronger signal that something in the stock has fundamentally changed. Therefore, when prices fall on increasing volume, the trend is gathering strength to the downside. When prices reach new highs or no lows on decreasing volume, watch out. A reversal might be taking shape. GameStop Corporation. Well, the stock made a lot of news in the past week, and I thought we could take a look at the stock chart to review volume, given that the stock had great momentum. I have the 15-minute intraday stock chart of GameStop Corporation on my TradingView platform, pulled up here for the 29th of January, which was the Friday. And I have it pulled up here just to take a look at the volume at different periods of time on that day to assess the price action as well as review the volume. Now, when the market opened at 9:30, you can see that the volume was very high. The color was red. The volume bar was red, and it shows that the close was lower than the open, and you can see the red candlestick to confirm this. 15 minutes later, though the volume was not as high as the market open, still it was reasonably good to continue the down move. Again, confirmed by the red candlestick, which shows that the close was lower than the open. Now, between 12 and 2 is where it gets really interesting, because you can see continuous red bars on the volume. So this typically signals a bearish move to the downside, and the red candlesticks show this price move to the downside. So it's just confirming that the close was lower than the open. Continuously it's showing the decline. Now, from 2:30, what you can see is you can see some reversal, which is confirmed by the continuous green volume bars, which show that volume is positive. It's starting to gain. There is more demand. Again, this is confirmed by the green candlesticks, which shows that the close was higher than the open. Keep in mind that the prices are moving to the upside on increasing volume. this is a good sign. This is bullish. This is actually a reversal sign here based on what we observed earlier during the day. Now, at the market close, you can see that the volume hit its peak. The green volume bar is again confirming that the price moved to the upside on high volume, confirmed by the green candlestick, which shows that the close was higher than the open. Now again, the volume bars are telling you a couple of things. So you can see that the volatility is the highest when the market opened and at market close. So the first 15 minutes, or you can even take the first half hour. The first half hour, the volume was very high, and the last half hour, the volume is very high. So that's when you could see a spike in volatility in trading. And at other times, it seemed to be fairly steady and consistent.